The Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote.
Hello, everybody. Welcome to another edition of the Value Guys Stock Talk Show with the Value Guys. I'm Val Hughes.
And I'm Mentum.
And we are 32-year Wall Street veterans that have taken on secret identities and gone underground in order to provide you with our candid views on a handful of stocks that we screen for each week here in the shop. You've seen our faces on TV, you've seen us quoted in the news, but our bosses would never allow our unfiltered views on the air, so we've disguised our voices, and they'll never know. This week, we've done a screen that I think is just a screen we've run in the past. It's a standard enterprise value to EBITDA screen, and we've picked out 3 exciting value ideas this week. But before we get to that, a couple of important caveats. First, this show's for entertainment purposes only. That's not a guarantee. Secondly, this is just a hobby for Mo and I. We're kicking back after work, having a few adult beverages. So, we're not doing all the work we do during the week when we're interviewing management teams and making forecasts and massive Excel spreadsheets, etc. We're doing absolutely none of that here. We're just kicking back. Third, I think I'm on 3. Our lawyers say to remind you that we may not have your best interests in mind, and we may accidentally recommend that you do the opposite of what is actually best for you. So check with somebody else besides us. That's probably the best. And then fourth, we have been drinking. It's just after work and we're kicking back. See all our caveats, photos, links to things at www.thevalueguys.com. In fact, today is July 10th, 2012, and I have an important Value Guys announcement.
Is it about the new website?
Yeah. What, did you listen to the show already? Anyway, we have an exciting new website that has been put up by a gentleman named Stefan and the people over at the Financial Survival Network. And they're just doing this because I guess they like the show, so it's very flattering. But we've got an exciting new logo where Mo and I are just waiting around for the V signal. So go figure that out. Go check that out. And then Stefan has done an amazing job. He's taken every show. This show has been on for 5 years. He's got every show back to 1840 or something like that. Every stock we've talked about on the show, there's a button. It clicks into the chart. And ignore that because sometimes stocks go down, of course. But more importantly, news. So if you've been a long-time listener to the show, there's now a button for stocks that shows a link to every stock we've ever talked about on the show. Can you believe that, Mo? I can't.
We are paying him.
We are? You must be paying
No, we're actually, when I had contacted him originally, we decided we were going to use your PayPal account. Have you checked that lately?
No, that's fine.
Oh,
absolutely.
No, but just so you know, we are.
That's my ex-wife's account, so that's cool.
We are paying for it.
No, in full disclosure, I don't think we actually are. I think supposedly advertising is paying for it, but I was just on the site and there's no advertising on the site. So the Value Guys continue to be
We're interviewing Jim Cramer
Yeah.
to see if we'll let him on and do a few things. He wants on.
I know. But anyway, check out the site, www.thevalueguys. It's got these exciting links to all these past shows. And also, he's created a way for Mo and I, as we're just going through life, reading the paper, we can send links, and they now end up on the homepage. So you can follow along the things that Mo and Val are kind of reading about and thinking are important enough to stick on the site.
Right,
We
and
can put them
we
up
have
on
the upcoming reality show, which Bravo is going to start shooting next year, so stay tuned for that. It'll be Val and Mo. They force us to live in a house together.
Really?
And, yeah, and
I'm not.
we're
Did
always
I sign
working
off?
on-
Did my team sign off on that?
I
Mo?
think your
I don't
team
remember
did,
that.
yeah. That's coming up.
All right. Well, that's exciting. So go check out the website. That's pretty exciting. And then what? This is the part of the show where thankfully I'm not involved, but we do, and we need some type of theme song. There we go. Value Guys Wall Street News. Brought to you by Mo Mentum.
Well, there was huge news last week. Huge.
Yeah. No, I saw that.
Well, you know, at the end of our show,
Yeah.
we pretty much always talk about macroeconomic trends when we're looking at that.
Macroeconomic trends, absolutely.
That St. Louis
That's what we do.
Reserve data, right? And you know, occasionally we talk about microeconomic trends.
Yeah,
We do talk
occasionally.
about that. But there is a nascent field, and it's called quantum economics.
Quantum.
And what it does is it examines economic trends on the subatomic level.
Really, what's happening in
Well,
the
you know,
cells? I see. No.
Nothing much has been done in
Makes
the field
sense.
because the Rosetta Stone has been missing. And last week in the CERN laboratories in Geneva,
Yeah,
they
got
announced that they had
something
identified.
going over there.
Yes, the Higgs boson.
Yeah,
And this is the Rosetta Stone to quantum economics.
really.
So now you
What
can
will
look
we
at
be
you can
able
look
to
at
do,
you
Mo?
can look at economic trends
Uh-huh.
on a subatomic basis.
Yeah.
And you can now do, using that, stock forecasts out with a 92% probability level out 2 years.
Really.
So
And
we're actually working on the Higgs boson portfolio allocation model. We're looking for 40% returns on my fund
is this what you're doing over in your shop?
next
Is this
year.
what you guys do over there for
So
those
for
big
all-
bonuses and all that?
For all
Wow.
of my for all of my clients out there, stay tuned. We're looking for 40 to 45% next year, and that's the big news on the science and.
How do you store those
Finance
things?
things.
You got a little wallet where you keep. I mean, they're very tiny.
They are.
Do you-
They're very very
Separate-
small,
yeah.
but we use a Dyson vacuum.
Ah, that's very good. Well, you know, it's good to know that somebody on the street's doing important work. We just sit around. We're doing it. We're doing the old-fashioned stuff. We're looking at stocks.
So one last
Yeah.
thing.
Thank
you.
you guys, Wall Street News.
Thank you
Please.
for the yo-yo.
Oh, you're welcome. Well,
I got a Duncan yo-yo
Yeah.
for my
Oh.
birthday.
birthday present for
And
Mo. Yeah.
a Duncan Imperial yo-yo.
Well, why not get the best?
And only two financial nerds would then Google Duncan yo-yo and then
Well,
go back
it's
to the
such a
website.
fabulous
and go,
yo-yo. You want to know if you can get in on it, right?
An hour later, we're at the parent website.
Yeah.
Now, tell me, have you ever seen anything like this before?
Well, I don't know. I
The
mean,
owners of Duncan yo-yos
well, we could buy this thing.
also own an automotive division that makes blow molded products.
That makes sense. Blow molded.
They
Yeah.
they do outdoor. They have an outdoor hunting division
Yeah.
that does realistic life-size deer decoys. Now
Yeah.
they have
On a
another
string, no
They have
less.
another division which
Yeah.
makes sense that does the same thing. They just call them lawn ornaments. And
Lawn
so if you want
ornaments.
some deer,
It's an amazing
you know,
company.
But they do tackle boxes,
Yeah.
fishing rods, an automotive division, and they've got yo-yos, and they've got a fluid technology center.
The Flambeau Technology Center.
They and the one I didn't even realize this before. They have long been recognized as a leader in the plastic floral container
I've long
market.
recognized them as that.
Plastic-
Haven't you? Oh yeah, they're the
Plastic floral
best.
con- So
I mean, how do you think they make these yo-yos? They've got a model to study for that.
I would love to see the guy that bought all that stuff and ask him. So
So the fluid technology, the industrial technology, and the yo-yo, how does that all fit together?
there's a strategic vision there that I think it would be a Harvard Business School case.
I think it's ripe for a buyout
Yeah.
and a breakup.
So anyway,
Personally, I don't know.
so we got some stocks.
Okay, so this week, and several, many weeks, not every week, we've got three kick-ass value ideas. We've been sitting around here working on this for quite a while, Mo, quite a while. I don't want to get into all the details. And we're going to be offering 3 names that came out of a screen. We just run screens here in the shop. This is Val. We have a little value shop here, and we run value screens. And this week, I think we ran an enterprise value to EBITDA screen. It's like the missionary position of value screens. It's straight up the middle, very simple, nothing fancy, but it gets the job done. We've got 3 tremendous names this week, Mo. And I want to mention what they are up in ahead of time, so people could just skip ahead to that section that they're most interested in.
They may just skip the show and buy the stock.
They could skip to the... At the end, there's apt to be music, so you could go right there if you want. But 3 names: Natural Gas Services, ticker NGS; Pier One Imports, PIR, which everyone's heard of. On Wall Street, this was left for dead a few years ago. And then Robbins Meyers, ticker Rbn, which
is not the ice cream company.
No, but I've been hearing about this for a long time, and in looking at it, it looks pretty interesting. That may be one I'm really pretty seriously interested in.
For all of you fluid management fans out there.
Who isn't a fan of that, Mo?
Exactly. So you'll have to wait for 2 other stocks. That is true. That's true.
Yeah, your age.
My age is
Birthday,
exactly.
Boy.
So Natural Gas Services Group, NGS. You know what? I'm reading this, and they focus on the non-conventional natural gas production, which I think is fracking, right? So
fracking.
That's what. Well, I mean,
Yeah.
fracking.
Yeah. Right.
So this is heralded as the next big thing. This could make our country energy exporters.
Well, there's so much that's already happened. I might have mentioned this on a past show. We own coal because strategically, long-term, China and India need lifestyles like the West. It's the cheapest form of energy to make electricity. So that's your 20-year plan. Meantime, this fracking has taken natural gas prices from like $8 per 1,000 cubic feet to $2.50, and our coal stocks have just evaporate. In fact, today I think Patriot Coal filed for bankruptcy.
Whoa!
And we used to own that.
Who'd ever think that?
No, I mean it's crazy. These prices for gas, but it's fueling a lot of growth in those industries that use fuel as an input.
Yeah, basically it's like discovering Prudhoe Bay all over again in the middle of the country.
It's fabulous.
So here's my question for you. This company has got sales that have gone from 50 to 65 to 88. I mean, that's a great sales momentum. The margins have been steady at 43, 44%. So you think it's in the right industry. Sales are up, no share creep. You tell me what you think about the valuation. But this thing has been done nothing for 3 years. 2010, the stock was at flat. 2011, it was down 23, and this year it's up 1. I would have thought with all of this stuff, the stock would have been a killer stock. So I'm confused.
Well, you know, it's interesting. These guys do not provide a yield. So we've talked about energy stocks in the past that are royalty based, or they've got a REIT structure. They got to pay out all the earnings. That's not the case here. These guys, Natural Gas Services, and what they do is they provide small to medium horsepower compression equipment to the natural gas industry. Let's see.
So that's what you do. You push that sludge down in there to break up the.
They rent these things to people to enhance the production. Now, we've had some conversations with management teams. In fact, we had a nice call a few weeks ago here in the shop with Schlumberger, which if you Google up SLB, they're the largest oil services company probably in the world. And so
I thought they made pajamas.
Yeah, no, that's a side business.
Schlumberger?
Schlumberger, it's a French pajama company. But, one thing you can do when you're trying to understand some of the, the fundamentals of a small company is call the big company that can crush them whenever they want and find out why they're not doing it. Or maybe you'll find out, oh yeah, we were going to open a division that does that. We are starting a yo-yo company. It's like, uh-oh. But what we found was that all the guys out there searching for energy, because gas prices have becomes so cheap, of course, you move your equipment to discover new energy from gas fields, which are paying, very little, to oil fields, which are down from 100 to 85 per barrel. Gas is down from 8 to 250. So my suspicion on this is that the stock is down quite a bit. I mean, it's at 14 and the old high was 30 4 or 5 years ago, is simply that people aren't buying as many of these small to medium horsepower compression engines, what have you, because they are not expanding the search for natural gas with prices down here. And so they're coming in. But my longer term thought, because this thing right now is 4.8 times EBITDA. If I take the inverse of that, and actually I don't usually have a calculator, but I do today, that's a 20.8% cash-on-cash return. Now, obviously implicit in that is that earnings are going to continue to be under pressure, but on the other hand, they've been going up for 3 years. So is the equipment in the natural gas world about to fall off because prices are down? Quite possible. But on the other hand, is this equipment so cheap that you need it just to maintain existing capacity and production, and it's such a small piece of the total expense pie that of course you're going to replace a compression engine? I don't know which it is, but I will say that when I see a company that has 44% EBITDA margins.
And 44% consistently. That's been every year for the last 4 years.
And they've got mid-20s% EBIT margins. Now remember, that's kind of a markup. EBIT margin, I take all my costs and add a markup. So if I take 1 minus 0.26, 1 divided by 1 minus 26%, that's 1 over 75. That's a 35% markup on costs. And when I see a margin that high, it suggests to me that these guys are doing something pretty unique, pretty specialized, or they simply would not get that margin.
Well, as a fundamental guy, you got to love the fact that these guys had as much as $13 billion worth of debt in 2008, and in one fell swoop, they've taken it to 2.8 billion and 1 billion, and now it's zero.
Zero, yeah.
So you got to love that.
A lot of cash flow.
Yep.
So I would be a contrarian on this one. I don't know if the stock's going up or down from here. But at 4.8 times EBITDA, there's a reasonable chance that gas prices will not stay down here forever because, they're cutting production, they are bringing in factories to use up the excess gas, and that we will get back to some more normal period for purchasing this equipment, and that the stock's going to, have a nice run from here over the next 3-4 years. I don't know, but it looks cheap as hell to me.
Yep.
Natural Gas Services Group, ticker NGS.
Now, let me ask you a question.
Yes, sir.
You are looking more at small caps during the day and during your career than I am. I took one look at this Pier One Imports and I thought, everyone talks about Apple being the amazing killer stock. This stock was up 1,300% in 2009. It was up another 100% in 2010. It was up 30% last year, and it's up 20% this year. Who would have thought? Pier One Imports?
Yeah.
So does that mean that it's inverse to housing starts? If people aren't buying new houses, they're spending more fixing up the ones that they have, and so rather than buy a washing machine and all that stuff when you buy a new house, they're going to Pier One Imports and they're buying candles for their existing house because they're not moving?
That's a good point. I think that you got to take this into perspective, which is the reason the stock was up so much is that in 2005, the stock was around 30, and then in the middle of 2008, it looks like it got to 15 cents.
Right, the stock was down 93%. That's what you said, it was left for dead.
Yeah, left for dead, and the problem was, and we were studying this in the shop, because companies like Williams-Sonoma, which owns Pottery Barn, or Bed Bath & Beyond, and Pier One, and, Cost Plus, World Market, and, all these stores that sell stuff that go in your house, It wasn't like one was doing better than the other. They were all doing badly. And this was during a period where people were buying a lot of homes. It didn't just start in the recession. I mean, during most of this decade or last decade, these things were all doing badly. And I think what we concluded was that coffee tables cost $400 and iPods cost $400. You know, sofas cost $700 and iPads cost $700. So we were seeing this enormous take-up of consumer spending into the electronics area for all these gadgets that didn't used to exist. And people are like, you know, my coffee table, I think it can go another year. And they all were crushed. And when that happens, the weak guys get beat up. Pier One, the thing about Pier One, and I've been familiar with this company for 30 years, the thing about Pier One is they were very early on some things. They imported a bunch of stuff. They had that bazaar type feel in the stores, and they attracted a lot of people with low prices for kind of interesting stuff. You know, the dorm, you know, my dorm, and this is a long time ago, had stuff from Pier One because it was cool and all that and cheap. Then they started upscaling.
You had stuff from Pier One in your dorm room?
Beads, you know, hippie dorm, you know. Stuff like that, incense, candles, you know, all that kind of stuff. In fact, I'll tell you that in the early 1990s, 15%, and I don't know why I remember this, 15% of Pier One sales were a certain item. Guess what it was?
Not a water bed.
Candles.
Candles, yeah.
Fire departments hated it. But it was like they had this thing going. And then guess what happened? And this is something to always watch out for.
Did the candles work?
Yeah, they work.
I always wondered if those work.
No, you light them and they burn for
do
quite
they
a
work?
while. Oh yeah, they work like hell. I mean, they really do. But here's the problem. Here's what happened. Sometime around 2001, Walmart, you know, big company, right? They're like, hey, we need to crank up our growth a little bit. What can we do? We got these big stores. We don't need a shoe department anymore. People are buying that stuff online. We got all this frickin' space. Hey, I know. Let's start a Pier One department. So honestly, they didn't call it that, but Walmart, one of the things Pier One had years ago was great relationships in Asia. That was one of their secret, you know, ingredients. Walmart starts bringing this stuff in. They knocked off Pier One in a corner of their store. And this thing, if you look, the gross margin here got down to 28%. Back in 07, it's 41% now. That's where it should be.
Right.
They got so beat up. So what's happened is, beat up, managers thrown out. You know, it's like, look, if Walmart's copying us, we have to think of something new. They've upgraded their stuff again. They've got some good merchants. They've basically rebuilt the company.
So they've rebuilt it and they've recovered. So
Yeah.
do you buy the stock now, or is the story over?
I don't think the story's over. They've recovered. I mean, they're selling at 7 times EBITDA. So that's a 14% cash on cash. You know, it's certainly at a recent high. You could have bought it for 15 cents in 08. Now it's at 16.
Oh, who would have thought?
Well,
But you know, all the analyst forecasts are all up for the 1 month, the 3 month, the 6 months. So that shows good confidence in the numbers, even though people are beginning to worry the economy's slowing down.
Yeah, well, I do think they come at price points that are below a Pottery Barn and that sort of thing. So they're attractive. They've got a long history of having interesting stuff that you want to come look at. So to the extent housing's recovering a little bit, consumers are recovering a little bit, and they are. We talk about that during our walking through economic trends section of the show. But I think that they can, given that they've righted the ship, I think there's a good chance that they can, you know, have a couple good years here as the economy continues to recover. Pier One, ticker PIR.
And you know what they say? They say in that industry, you can sit on your couch, but you can't sit on your iPod.
Right.
So
Yeah. And your couch doesn't play music.
that's true. That's true. So here's what
Okay.
you've all been waiting for:
It is why.
fluid
Ah,
management.
fluid management.
For you fans of fluid management, you couldn't ask for a better stock.
Okay, last up. Robbins and Meyers, ticker Rbn. Why do we like this one? Well, It's 6 times EBITDA, which is pretty cheap. They've got good returns, margins.
Margins are expanding. Look at that, 9%, 18%, 22%.
Yeah,
Those
well,
EBITDA
yeah.
margins.
I mean, they're coming out of the downturn
Yeah.
nicely. Gross margins at 38%, and some people might say, well, why not 50? And I say because at 50 you attract
Too much
competition.
competition. Unless you have huge barriers to entry.
Right. And I think that these guys are doing some very interesting proprietary stuff. Here's what their 10K says. They sell fluid management equipment for process industries.
Which is very self-evident what that is.
It manages fluids, is that right?
That's exactly what it is.
And I would call this stuff productivity equipment. If you're managing fluids, you're preventing spills, you're moving stuff quickly to a manufacturing station.
Well, listen, I tell you what, I manage idiots, and I'd much rather manage fluid.
Yeah.
It would just be less frustrating.
The fluids don't ask for raises or time off either,
Yeah, they
or
don't.
bonuses.
They don't waste your
care.
time by knocking on your door
I
like you
understand.
know who.
So let's see. The company also supplies engineered equipment and systems for, my God, Mo, critical applications in global energy. We certainly need that.
Yeah, that's true.
Absolutely. And then the thing that caught my eye here was, they make systems used in oil and gas exploration, and we're going to need that, of course. But here's the thing: glass-lined reactors and storage vessels.
Are we still producing reactors?
I'm sure there's reactions going on
All the time.
In fact, nuclear is having a little bit of a comeback. But I don't know if this means nuclear reactor.
No, but I think that there's North
kind of
Korea's been
reactor
buying
would
a
this-
lot of these, and
What do you think that
Iran's
means?
been buying them. And
I don't know what it could just be. It could be the nuclear reactors, or it
well,
could
wait a
be
minute. The company
some
was
other
founded
type
in
of reactor.
1878.
Well, the nuclear reactors
Was
back
probably
then
not
were
their
pretty
It
primitive.
was probably not their
Pretty
first product.
So anyway, they're doing some stuff that seems tricky to understand. We certainly don't understand, and they've got a 20% EBIT margin. Again, to me, that says something proprietary.
How about no long-term debt?
No, well, I looked it up because I was suspicious of that.
Misprint.
Oh, wait a minute. No, that is right, but I looked up the cash. See how this thing doesn't show the cash?
Yeah.
So their cash, they had $230 million last year. They were building some cash. They're $150 million in cash, which is about $3 a share.
What do you think?
No debt. It's a nice feature.
Yeah. Yeah.
So let's see, 6 times
So-
EBITDA, that's 16% cash on cash, 10 times net cash flow, 11 times earnings.
Well, it's interesting, and the fundamentals you're ticking off all sound great, and the stock reacted to it. The stock was up 45% in 2009. It was up 50% in 2010. It was up 36% last year.
Yeah.
So clearly the markets recognize that. Here's a possibility. The stock's down 13% this year. It very well could be that it's going down because of the market. At the same time, the fundamentals are improving. And usually that's something you at least want to take a hard look at. Because if this stock's down 13% this year only because of the market, no changes in the fundamentals, and we can't find any, it might be an interesting thing to take a
Well,
harder
a lot of
look
times,
at.
companies like this in a little bit of a downturn, there's fear in the market. I mean, we had a horrible May, a medium June, but there's a lot of concern about the near-term economy of Europe, of China. We don't know what our taxes are going to be next year, so a lot of
Spain,
capitalists,
Italy.
everyone's kind of on the sidelines, and yet these guys are managing to improve margins.
Push sales.
Improve ROE, ROA, push sales, and to me that suggests that somebody's going out of business because these guys are taking their lunch, and that's usually a good sign.
And you know what?
Yeah.
They have a dividend.
Oh, I didn't notice that. What are they?
Well, you wouldn't notice it because it's sort of microscopic.
0.5.
But it's competitive.
Do you want me to try to guess the dividend?
Let's just see if
Or we could do that
this.
next week. I don't think I could.
No, you couldn't.
It
This
looks
is a little
like
too
it's some
complicated.
It
Yeah.
goes up a penny a year or whatever. Okay, well that's
The first part of our
That's
show.
our 3 stocks. Now, please stick around because at this point we like to do a little thing we call paging through national economic trends. We pick up the national economic trends from the Federal Reserve Bank of St. Louis.
Because it's always good to close a show on a depressing note.
Yeah, we like to do that a lot. Paging through national economic trends. We've been talking about this a lot over the years, but the Federal Reserve Bank of St. Louis National Economic Trends, Google it. It's all the information, not that you might want to know, but it's what you need to know. Or not, whatever, either way. But here on the Value Guys Stock Talk show, we page through here, the end. I don't want to make it any more fancy than it
Well,
needs
don't
to
go
be.
another page. Go
Where are
backward.
we?
Go backward
All right, we're
one
starting
page.
on page 3. Wow.
I have a question
All right.
for you.
Yes, sir.
Bottom right-hand corner, unemployment
Unemployment rate.
Jobs data.
Yeah.
Third month, and that, you know what they say when you're doing very sophisticated technical analysis?
Yeah.
3 points make a trend.
They do?
Think about it.
3 points.
Make a trend. And so
Okay.
we've now had
Yeah.
3 months
Yeah?
of terrible job data. What do you think?
Terrible.
Terrible?
Terrible.
70,000 new people.
Yeah. Yeah.
And they were all hired by McDonald's.
Well, here's what I think. I think there's a lot of lines on this page that squiggle around. There's a lot of noise. And right now,
Is that a technical term
yeah,
you're using?
squiggle. Yeah, for me it is. You know, and I think it's clear. Spain, Greece, Italy, right? They buy stuff. They soon may not be buying a lot of stuff. And so that has people a little concerned. And of course, there's U.S. companies that have big divisions internationally. And I think that this is just, you're seeing a little caution. We also don't know what the tax rate is next year. There's going to be, the last half of the year is apt to be very interesting as these political campaigns get out there. And, you know, to them, it's just trying to be the president. But to the rest of us, we got a plan. We got to plan what do we got to save to retire. Businessmen have to decide how much to invest in plant and equipment. These plants take 2 years to build, so your return matters. And, you know, I think that maybe the politicians don't always get it, that people out here, real people, have decisions to make that, you know, go beyond what's going to happen in November. And I think the uncertainty, I think people are just cautious. So all those guys that make $250,000 and over that just got a tax hike, or Obama wants the tax hike, those are the only people that hire. Every person that hires somebody in America probably makes over $250,000. That's the people. Those are the people that you put in charge of those important decisions. And right now, they're a little more worried about their own situation than whether the company should hire some guys. And I think that there's just a lot of uncertainty. So that's all I think.
I agree. And, you know, when you think about uncertainty, here's another uncertainty graph to take a look at. If you look on page 4, it's the real gross domestic product. I think Morgan Stanley said this morning they think the next 3 quarters of the year are going to be meaningfully slower than the first quarter, and they are attributing it to people kind of the deer in the headlight freezing up because of this fiscal cliff.
Yeah.
Where you're not only going to have at the same time going through the mill the debate on the tax cuts.
Yeah.
And you're going to have the debt ceiling. So
yeah, well,
you could have
about
a perfect
dividends.
Yep,
right now,
right.
the tax rate on the table is
Yep.
that the taxes on dividends, those are the things you get back when you buy some of these stocks, are going to go from 15 to 40%. And that's going to put a damper on demand for stocks. So all the fundamentals we're talking about, and fundamentals should be the most important element of a stock. Right now, I have to suggest that some of everyone's decision has to be thinking about what are my after-tax returns. That's what you get to keep. And so I suspect there's going to be a lot of volatility and uncertainty the next 6 months.
For sure. I mean, that's you're starting to see the whole economy slowly slow down until they can get some visibility.
Something caught my eye here on page 5. National Economic Trends, page 5. The nice thing about this site is they update this stuff through today. This is through today. It's amazing. July 10th, 2012. something called real GDP revisions. So the government, they come out pretty quickly with a GDP estimate. Then a few months later they revise it because more data has come in. Then a few months later they revise it again because some more data has come in. So there's 4 revisions, and the one that has the 4 is the first quarter of 2011. The second quarter of 2011, so far only 3 revisions, one to come soon, and the ensuing quarters have not yet had their final revision. The only quarter that's had its final revision is the first quarter 2011, and here's why I'm mentioning this. The first estimate was close to 2% for an annual rate of growth back then. Then they revised it. It looks like there was absolutely no revision to that. It stayed at, almost 2%. Let's call it 1.8. Then, and I don't know the date on this, it was probably 3 months ago, there was a third revision, and it ticked up. So instead of 1.8, the third revision suggested that it might be 1.9. You see that, Mo?
Yep.
Then there was a revision very recently, within the last month or so, and I've never seen anything like this. This thing got revised from 1.9 to 0.4. So it was cut
That guy
by
was
70%.
That guy was fired, I think.
He had a bad day. I don't know what happened.
No, he had bad 3 quarters of forecasting or reading.
That if the next couple quarters, their final revision is similar to this revision from the first quarter of 2011, then we are still smack dab in a recession. I know that somebody in the National Bureau of Economic Research that makes these calls on when the recessions start and end, I believe it is of their view that the recession has ended, and that's only because they're looking at GDP data that says the GDP growth was 1.9%.
Okay, let me ask you.
Now we're seeing that it's maybe, who knows, but substantially lower
All
than
right,
that. That's shocking to me.
Did they publish a time estimate as to when this number is going to come out? Do all of these revisions come out at the same time? So do we know in 4 weeks we're going to get the full year annual revision, and at that point we can draw some more serious conclusions, or did they just do that when it's ready?
That is such an important question to having a serious discussion about this,
Which is
why we're not having
exactly.
that. Right? But I do think I'm just going to do some simple review here. This thing has 3 bars. This has 4. So I'm going to suggest
that's 1 bar
that
for every
one
quarter.
more is coming, and it's coming soon. I don't want to get too complicated, but if this continues,
one more revision is coming.
If they revise the second quarter 2011 from 1.2 to 0.3,
we're in a recession.
And then they revise the third quarter 2011 from 2% to 0.3, someone's going to think something's amiss. That's all I'm saying.
Well, optimism is a good thing. You just don't want it in your forecasters.
Yeah, no, of course. So, all right. Well, that's a little bit of a sad. That was a little bit of a negative view, and I know Phil was appreciative recently that we had a positive spin. I don't want to disappoint him today, but this looks horrible. The thing we just talked about.
Well,
Let me mention something that looks a little better.
Yes.
Do you have a good one? We want to balance,
Well, I was going to mention that interest rates for people that are still thinking rates could go down. Boy, tips are negative. Maybe then the guys over at PIMCO continue to be pretty negative.
Treasury inflation protected securities are negative.
Negative right now.
So people are willing to give up principal for safety.
What does that tell you?
It tells you that
Uncertainty.
people are scared.
Yeah, uncertainty. So that was the whole uncertainty segment of the show. But let's end with something happy.
Well, I'm not ending, but I got something happy. And this ties into, I know you have an issue with the non-farm numbers because you want to get some farm numbers in here.
I would love to see some farm numbers.
That's only 3% of the economy now, but I know you have deep roots
Farmers
on the farm.
Farmers are some of our biggest investors.
Absolutely. But here's the thing. Average weekly private non-farm hours
going up.
Up, still up. So that's good. Real change in private.
Well, that's because they're firing so many people that the guys who are left over are working double shifts.
You think so? But it says average. So I'm assuming the guy's not working, they're adding 0 in. But you could be right. Maybe
Yeah.
it doesn't take that into account. All right. Well, I'm paging through. Here's something. Here's a little bit. This could be viewed by some people to be good news, I guess. On page 8, the producer price index. With interest rates so low and returns so low, the thing that could really harm everyone is too much inflation, which frankly I think we will get because the government would rather inflate away this debt than pay it off. So I do think that's my best long-term forecast. But I'm looking at the producer price index, the PPI. It doesn't exclude food and energy, it includes it. It just took a super big dive, and that's a technical term. Super big dive, the SBD, straight down from about 6-7% year over year to nearly 0, and I think that's got to be because of energy prices. But it's a huge reduction. There's not too many of these back through history, and so I think that if that continues, returns even on the Treasury at 2.5% could become a real positive if this inflation stays below 2 or 1, which this suggests it could be, and I think that's important to note. I don't know that I have anything else that interesting.
Well, I can
here
skip
today,
if
Mo.
you skip to the end with me and just
What
take
do
a
you
look
got?
at one last chart on
Sure.
page 21.
21, yeah.
And it's corporate profits, and here's what
Oh,
we
yeah.
know. We know
we
that
talked about this a few weeks ago.
Yep, they continue to trend just moving downward a little bit.
Yeah, they're just
And,
rolling over here.
And I know that the big story for a long time was during the downturn, every company in the country was using everything they could to squeeze costs. They got a lot more efficient. A lot of them computerized, and so we saw this big jump in corporate profits once we started even just a little bit of anemic demand coming back, but it's rolling over. What's going on?
What's going on is I think, that first 20% increase in sales, you can kind of get along with your existing staff because you laid some people off, you're hesitant to bring them back on. And I think what's happening here is two things. One, sales are starting to decelerate a little bit in here.
But you still have to bring on the people to accommodate that new critical mass.
Once you realize that this new level of demand is kind of consistent, even if it's flat, you got to start hiring people because you got a bunch of people working 50-hour weeks that's not sustainable. So that's actually good news, and this is, kind of a bottom line explanation of, the employment rate continues to go up. So this is probably a sign of that.
Yep.
And it's good for stocks in the sense that it is rolling over. But I will note that it's at a very high level compared to any time in history, and I think a lot of that is due to automation, and that's helping corporate profit margins.
So is that a cheery note?
Yeah, corporate profit margins.
There you
So
go.
that's our show for this week.
Don't forget to see the new and improved website.
Yep, www.thevalueguys.com. And then we have been a little bit neglectful of sharing our favorite each week. So I thought that we could do that this week. I'm going to share my favorite.
Well, I've got
yeah?
mine. I'm Pier One
Pier
Imports.
One.
That's a new name to me. Everything I was looking at said, from a big picture standpoint, if people are going to be fixing up or decorating their existing houses while they're waiting to buy another house,
Yeah, right.
I think we're going to see a couple more years of that as the housing market shakes itself out. All of the numbers look good. Stock's been acting great, so yeah, I'm on board with it.
I agree with that, but I'm going to have my own favorite this week because I think they might be a little more proprietary, just judging by the EBITDA margins in the mid-20s, and that's Robbins and Meyers, ticker Rbn. So,
The fracking guys.
So that's it for this week, everyone. You've managed to spend another 50 minutes listening to The Value Guys. See all our caveats, photos, past shows, a vastly better website at www.thevalueguys.com. So long, everybody.
Have a good week.